Good morning, Jim Cramer here, September the 19th. What a great day yesterday. It looks like we got a little bit of a break, a temporary reprieve from worsening interest rates. So yesterday, as you can see from this line, this is yesterday's line, the Fed announced that they were going to continue to buy mortgage-backed securities, and they were not going to taper at this time. And so what that did was it sent the bond market into a little bit of a price rally. Bond prices started to go up, rates started to go down. We recovered about 1.75 points in bond prices. 1.75 points is kind of like what you'd get charged to do a loan type of thing. So that much was given back to the customers, which in turn drove interest rates down. Yesterday we saw quite an improvement in interest rates, and the rally turned into an overreaction sometimes, as it does, or maybe we'll call it a massive correction. And then the next day, typically what happens, as you can see here, is it settles down a little bit. And it tries to come back into a comfortable trading range. So what I've done with these lines here is basically set up what I think to be a couple of possible different trading ranges. Now this bottom line here is a trend line of where the bond pricings have been going. So bond pricings have been getting higher, which means rates have been getting better. Okay, bond prices go up, rates come down, and we have to settle in now to some trading range. So we have two choices here. We have probably this trading range here or this trading range down here. And we're going to test first this trading range here and see what happens with the bond pricing. Today we're down 22. We haven't quite hit the bottom. This is about 100.5 in terms of bond pricing. We haven't quite hit there. If we bounce off of this, or if we settle in here going into tomorrow, it means we're establishing a trading range that's more in tune with better interest rates for us at the moment. And as I mentioned at the beginning, it's temporary. I mean, we have an economy that's slowly getting better. We have a Fed that's trying to administer policy to maintain the improvement, maybe accelerate the improvement. So while bond pricing is improving, it's not going to skyrocket much more than it currently is. So let's see where rates are over the next couple of days. My recommendation at this point in time is to actually lock and not play the market so much, because we're still in positive territory from yesterday. That being said, let's take a look at it tomorrow, but again, I feel like today's probably a good day to lock. So lock them up. Thanks very much.